Edge runner, afterlife. They're the kings of the trades, making moves in the shadows. They're the masters of the game, slipping on the profits, watching numbers rise and fall. Living fast, make or break. They risk it all. They risk it all. Late nights with the
Hey guys, in today's video I'm going to do a quick summary of last week's price action, then talk a little about fundamentals and what we may expect for next week. So starting with the fundamentals, we have quite a few big events next week. So starting on Monday we have a bank holiday, so we have Labor Day on Monday, and then on Tuesday we have manufacturing PMI, and then on Wednesday we have JOLTS job openings, and then on Thursday we have employment change, unemployment claims, and services PMI. And then on Friday we have NFP, and we also have unemployment rate. So you can see we have quite a few events, and some of them really big events next week, which should cause a lot of volatility in the markets and should give us some opportunity for some really good trades. Okay, now moving on to the COT data. So on the COT data, it starts to make a little more sense now. So if we focus on the legend on the left over here, we can see commercials in red, which you can see is pulling back now. And then we have non-commercials in green, which you can see are starting to jump back into the market now. So this is typically a bullish sign and consistent with what we're seeing in the price action as well. So we can, based on this data, we can expect to see NQ pushing higher in the coming days and potentially weeks. Okay, now moving on to the charts, I'm going to start with the monthly time frame. And the reason why I want to start with the monthly time frame is because we just had the monthly candle closure, and we do see some interesting things on the charts as well. So if you look at the last candle, what you can see is we had a massive drive to the downside. It mitigated the monthly order block and then pushed away from it really aggressively. And you can see that with the huge wick on the downside coming right back up near the top of the candle. So for me, this is a really bullish sign. And my expectation now is, based on this candle, is that we're going to continue higher now. And if we look at the weekly time frame, so what we can see on the weekly time frame is we created that weekly fair value gap that I spoke about in the last video, and this last week we came back down into it, mitigated more or less the 50% of the fair value gap, and then after that started to push away from it. So once again creating a pretty significant wick on the downside, which for me is a bullish sign that we may start to turn around and continue to the upside now. Okay, now if we go to the daily time frame, so you can see that we started the week quite bearish. So you can see aggressive push to the downside, pull back, aggressive push to the downside, pull back, and another aggressive push to the downside. So this is Wednesday's candle, and you can see on Wednesday's candle we more or less filled the daily fair value gap. And then when Thursday came around, we had that NVIDIA news, which caused a lot of weird reactions in the market. Essentially, it did push the price a little lower. And at this point, I was thinking maybe we retested this daily fair value gap, come back into it, and then drive lower. But what it did instead is it pushed up the entire day, breaking the lower time frame high, so taking out the high on this candle. And then after that, we had an aggressive push to the downside. But thereafter, the next day, once again, starting to push up again, and we did have a little crazy price action where it chopped up and down, but you can see we are showing a lot more signs of bullishness now. And from my point of view, I think we are starting to become more and more bullish. This looks more like a IRL to ERL pattern where we mitigated the internal range liquidity, and now we're going to target the external range liquidity. So for upside targets, I would say that the low-hanging fruit is going to be right here where we have these equal highs, And then the next target will be the range high right here. And as I've been talking about in the previous videos, we do have the daily fair value gap and the weekly fair value gap above that. So this will ultimately be the short-term target that I would expect price to go to if we remain bullish. But at the same time, we do need to be a little careful, because any of these points could act on as drawn liquidities, and we may go into them and have immediate reaction, pushing price right back down. So I don't expect that to happen at this point, but that is always a possibility for the bearish scenario. But all in all, I am more bullish than I am bearish right now. Now, if you bear with me a little longer, there's some details I want to go through on the lower time frame, so I'll use the hourly time frame. So as I said, it's been a little choppy in this area, but as you can see, we are driving higher and higher, and that's why I expect price to push to the upside now. This looks to me like the start of a market maker buy model, and if we just add our fibs and look at some of the potential targets, so based on standard deviation, you can see, so creating the standard deviation on the manipulation leg, you take the high to the low, and from here you can see by doing that the 2 standard deviation target is the fair value gap. Exactly, like spot on. And this right here, so 20,165.75 will be the short-term target that I would expect price to go to. And if you look at the all-time highs, so the all-time highs is between the 4 and the 4.5 standard deviation, and the maximum is usually around 5 standard deviations if it were to get that far. So what did I say? 165.75 as a short-term target, so just let me make sure that's very visible. And then other targets, I'm gonna make sure we have the price label. Yeah, so it's over here, 165.75, and then the low-hanging fruit will be this high right here, which is 19692, which will be the next target. And then we do have other areas in between, but I think the area that I would focus on is this high right here, so 20,075.75. So these would be the areas that I would look at, assuming we remain bullish. And there was one other thing that I did want to mention that I completely forgot about until now. You can see that we had this bearish channel that we were trading through all the way down, and then we peaked below it, and then after that had that massive reaction and then broke the channel, and then after that we had a retest, and now we're starting to push out of it. Well, we had one more retest and then came out of it again. So my expectation now is, it seems like we're more likely to push up than down, and if we remain bullish, I would expect this fair value gap to be mitigated, and then after that price to continue higher. But as I said before, we do have a holiday on Monday, so Monday is going to be most likely a low probability trading day. But saying that, one of two things can happen. We can have one-way direction pricing the entire day. When I say the entire day, it's actually a half day. So the market closes, I believe, at 12 noon EST. So we don't have the entire day of trading, but we do have into New York, so from Asia all the way into New York, that we can trade. And we may get that one-way pricing where it just tries price in one direction and stays that day the entire day, because there is low volume in the market. But at the same time, we could have really sloppy price action, and it could be just choppy all day long, seek and destroy, price going up and down. That's the second scenario that I can see. So I will be trading on Monday, hoping that we get the first scenario, which is the one-way pricing. See if we get a pullback into this fair value gap, and then if we break the high, then look for another pullback for continuation, and then just hold that trade all the way into New York. Okay, so just to summarize, I am bullish right now and would like to see higher pricing in the coming week. The biggest concern I have is the impact on the employment data, because we have a lot of it next week, and the Fed is going to be focusing on employment moving forward. So I don't know how the market is going to react to this data. Anyways, that's it for this week. If you have any questions or comments, leave them below. Otherwise, I'll see you for the next one. Peace.
Run up after life. They're the kings of the trades, making moves in the shadows. They're the masters of the game, slipping on the profits, watching numbers rise and fall. Living fast, make or break. They risk it all. They risk it all. Late nights with the charts, they analyze the trends. Calculating risk, they're the market's best friends. No fear.